Welcome to the GSMC Financial News Podcast, the show that delves into the ups and downs of the stock market, changes in the economy, and news from the worlds of real estate and technology. From breaking news on the New York Stock Exchange, NASDAQ, or the overseas market, to updates on the bond market, if there's money to be made, we've got you covered.
Welcome to the GSMC Financial News Podcast, brought to you by the GSMC Podcast Network. I'm your host, Virginia Lucci, coming at you live from my house and surrounded by my cats and dogs in a very rainy Montgomery, Alabama. I have a great show for you today. As always, I'm starting off with a word on the street, and my goodness, this week has been full of twists and turns. In my second segment, I'll update you on the status of the coronavirus relief package and the coronavirus vaccine. In the second half of the show, we're celebrating the return of the NFL and looking at sports betting, and I'll give you 10 of the best sports booking sites. Before we even go into our top 10, I'm going to let you know that the laws are different in every state, so please observe all local laws and ordinances in your area. Now for my second disclaimer of the day. Don't come at me. This show is for entertainment purposes only. I'm not providing legal, tax, or financial advice. Please visit a local attorney, tax preparer, or financial advisor for advice tailored to your needs. Now let's get to it. Stocks fell in choppy trading on Thursday as tech shares struggled to build on the sharp rebound from the previous session. The Dow Jones Industrial Average traded 158 points lower, or 0.6%. Earlier in the session, the Dow was up more than 200 points. The S&P 500 dipped 0.6% as well, and the NASDAQ Composite was down 0.4% after surging as much as 1.4%. It is a tricky market. Apple shares were down 1.6%, after rising as much as 2.7%. Tesla, which was up more than 7% at one point, traded 3.4% higher. Netflix and Microsoft were both lower, along with Facebook and Amazon. Thursday's move followed a broad rally for the market on Wednesday, with the S&P 500 posting its best day since June. The NASDAQ pulled itself out of correction territory as tech managed to claw back some of its recent steep losses. Wednesday witnessed a partial recovery, but we do believe that the switchback ride of the last 5 weeks will have placed at least a temporary cap on the powerful advance that has taken place since March. According to Michael Schowell, chairman and CEO of Marketfield Asset Management, this is not to say that the damage is irreversible, particularly if key support at the 50-day moving average manages to hold the coming sessions. But it will probably take a few weeks before the September 2nd high can be fully tested or surpassed. The S&P 500 tech sector fell 11.4% between the close of September 2nd, when the market hit the all-time high, and Tuesday. Over that period, the S&P 500 dropped nearly 7%. Tech then clawed back some of its losses on Wednesday, posting its biggest one-day surge since April. So it's been a roller coaster the last 3 days on the street. The 3-day drop came amid increasing worry on Wall Street about a tech bubble, and we talked about that last episode, with those stocks fueling the NASDAQ to record highs despite the coronavirus pandemic's hit to the economy. Some said the pullback did not go far enough, with Duquesne Family Office CEO Stanley Druckenmiller telling CNBC on Wednesday morning that the market was in an absolute raging mania. Don't think he's wrong here. Others pointed to reasons why the market could regain some of its footing once again. Liz Young, the director of market strategy for BNY Investment Management, said the investor cash still parked on the sidelines after the pandemic-induced sell-off in February and March should provide support for stock. People go to cash in droves, and it's immediate. It's a big wave. They come back in drips. So as it drips back in, that cash is going to look for more attractive valuation opportunities. So I think it's natural that it would look for some things that have been a little more beaten down, or some of the stocks that haven't been driven up at this point. She goes on to say, I don't think that we're in a place now where you have to start selling rallies and taking exposure off the table. So it's crazy, but maybe there's hope. The Innovator IBD 50 FFTY exchange traded fund gained another 0.4% Thursday after posting strong gains the day prior. The index is now finding support at its 50-day line. The growth-focused index was primarily boosted by gains in Double Turbine, APPS, Thermo Fisher Scientific, TMO, and Fortinent, FTNT, which gained about 1.7% each. Innovator IBD 50 is now nearing the upper edge of its 5% buy zone after shares fell back inside the buy range of a cup with handle base and a 35.14 buy point. As for the Dow Jones, the majority of the stocks traded lower with only 7 names posting gains. Disney, DIS, McDonald's, MCD, and Nike, NKE, led the upside with gains of 1.7%, 1%, and 1% respectively. Meanwhile, Caterpillar, CAT, and Walgreens, WBA, led the downside with losses of roughly 2% and 1.4% respectively. Outside the Dow Jones, the leaderboard stocks found support. IBD's change to uptrend under pressure from confirmed uptrend on Tuesday marked the first change in the market outlook since the S&P 500 made a follow-through on April 2nd, returning the market to a confirmed uptrend after this year's market crash. The downgraded outlook means investors should avoid chasing new breakouts since they now have a lower chance of working. Beyond the Dow Jones, leaderboard stock continued to find support after the unexpected sell-off that occurred over the last week. Adobe, ADBE, rose about 3% after RBC raised its price target on the stock to $550 from $440 and maintained an outperforming rating. UBS raised its Adobe target to $540 from $450 and held a buy recommendation, but shares rolled back the initial increase to about 1.4% gain. The stock briefly climbed back above its 470.71 buy point Thursday morning, but remains inside the 5% buy zone currently. Adobe incurred a sell signal Tuesday when it wiped out all gains from the entry, but after finding support near the 50-day line, investors can try to add some shares. Keep in mind, market risk is higher. And Adobe is due to report earnings after the bell on Thursday. So at the time I'm recording that, I don't have their market earnings right now. So shares of PayPal, PYPL, are also extending gains from rebound off the 50-day moving average, creating a follow-on buy area. Microsoft, MSFT, is also back above its 50-day line, but rebound is still looking soft, according to leaderboard analysis. Now for the not-so-great news. Unemployment. Weekly jobless claims were worse than expected. The Labor Department on Thursday reported 884,000 first-time filings for unemployment, compared with the 850,000 expected by economists surveyed by Dow Jones. The total was unchanged from the previous week. Continuing claims from those filings for at least 2 weeks rose from the previous week, hitting 13.385 million, an increase of 93,000 from last week's report, and an indicator that the strong jobs improvement through the summer may be tailing off entering the fall. The Labor Department changed its methodology in how it seasonally adjusts the numbers, so the past 2 weeks' totals are not directly comparable to the reports from earlier in the pandemic. So we're comparing a little bit apples to oranges here, but the overall trend is not an improvement. So the claims not adjusted for seasonal factors totaled 857,148, which is an increase of 20,140 from the previous week. The 4-week moving average for claims through the week of September 5th, a number which helped smooth out volatility in weekly numbers, declined 21,750 to 970,750. The moving average for continuing claims fell 523,750 to 13.982 million. Claims under the Pandemic Unemployment Assistance Program continued to climb, rising more than 90,000 last week to 838,916. The total of those claiming benefits through all programs through August 22nd also rose to just over 29.6 million. At the state level, California showed the biggest increase at 17,953, while Florida reported a decline in claims of 9,049 according to the unadjusted numbers. Around 1.7 million workers filed new applications for jobless benefits last week between state unemployment insurance and the Pandemic Unemployment Assistance Program. That figure has increased over the past 2 consecutive weeks, pointing to continued and historically elevated job loss 6 months into the crisis. The U.S. economy is recovering from an unprecedented shock brought on by the virus. Non-farm payrolls declined by some 22 million at the onset of the crisis, and about half of those jobs have been recovered. Half of them have not. So we're still in a pretty good decline. But even August showed some slowing of those gains, even though 1.4 million growth was better than Wall Street estimate. Economists worry that a resurgence of the virus in the fall could slow or even reverse some of this progress. Recent moves in Pennsylvania and New York to ease restriction on indoor dining have raised hopes that the hospitality industry can begin to recover, but bars and restaurants are still under really strict restrictions in most of the Northeast. As of Thursday, only 20 states are paying an extra $300 per check to those filing for assistance. Those states are Alabama, surprisingly, Arizona, Arkansas, Florida, California, Idaho, Iowa, Louisiana, Massachusetts, Minnesota, Michigan, Missouri, Montana, New Hampshire, New Mexico, North Carolina, Rhode Island, Tennessee, Texas, and Utah. Montana is actually kicking in an extra $100 a week, so workers will get $400. South Dakota is the only state in the union that did not apply for any assistance whatsoever. States will get up to 6 weeks worth of lost wage assistance money from the Federal Emergency Management Agency, which is overseeing the program. States received an initial allotment of 3 weeks and must then apply for additional weeks. Many states have been approved, the 20 I just mentioned, for some additional weeks, while some have not. A full 6 weeks of funding would supply a total of $1,800 for workers unemployed from the week ending August 1st, the week ended on September 5th. Workers receiving benefits in states that have started paying out lost wage assistance won't necessarily get their payment right away. States can only disperse funds to workers who have self-certified that they're unemployed or partially unemployed due to disruptions from COVID-19. Since that sort of certification was already a requirement to get pandemic unemployment assistance, some states appear to be doling aid to PUA recipients more quickly than those getting traditional unemployment insurance. Other factors could delay payment for days or weeks too. In Florida, workers who receive benefits by a debit card instead of direct deposit will have a paper check mailed to them, according to the Department of Economic Opportunity. Such workers should verify their mailing address record is correct, the agency said. It's been about a month and a half since unemployed workers received a $600 weekly supplement to benefits, which lapsed at the end of July. That subsidy had been part of the CARES Act enacted in late March, and Congress has been unable to reach a deal to replace it with another weekly enhancement benefit. This is a longer-term fix, but I don't think this is really going to get us to where we need to be. So we really need some federal funding. And right now, I'm going to take a quick commercial break. And when we come back, I am going to discuss some of the longer-term options that we have and where that effort is heading. So stick around. And if you wait until the end of the show, I'm going to give you 10 of the best online sports booking apps.
Are you a business owner? Someone interested in the latest news that might affect your business? Then check out the GSMC Business News Podcast, a show dedicated to keeping you up to date on all things concerning business, technology, and the stock market. Get a head start on the day as we keep you updated on the latest goings-on Wall Street, money, jobs, and technology. The GSMC Business News Podcast has you covered.
Welcome back. In our last segment, we took a general view of what's going on the street, and it is a little topsy-turvy. This segment, I wanted to take a closer look at what's going on with the coronavirus relief efforts and our effort to find a vaccine. So I think this is going to make you smarter. The U.S. reported 34,256 new cases of coronavirus on Wednesday, after several days of total daily new cases below 30,000. Those low numbers were likely impacted by the holiday weekend, which shuttered local health departments and other offices, so people didn't have the opportunity to take a COVID test. Epidemiologists are closely following the data after Labor Day for signs of a surge in new cases. So let's look at what's going on with the stimulus bill. On Thursday, the Senate failed to advance the Republican coronavirus stimulus plan, the latest blow to stalled efforts to pass another package to mitigate the pandemic's damage. The measure fell short of the 60 votes needed on a procedural step to move towards passage. All Democrats present and one Republican, Rand Paul of Kentucky, opposed it in a 52-47 vote. The legislation would have reinstated enhanced federal unemployment insurance at the rate of $300 per week. Now, I want to make something clear that in our last segment, we just discussed the additional $300 of unemployment that workers were getting in 20 states. That is sourced from a different pot of money. That comes from FEMA, which is controlled by the executive branch. In order for this to continue, we do need for Congress to pass another stimulus bill so that that money will come directly from the Congress's purse. So moving on, the Republican-backed bill would have authorized new small business loans and put money towards schools and into COVID-19 testing, treatment, and vaccines. But the measure did not include a second $1,200 direct stimulus payment to individuals. It also lacked new relief for cash-strapped state and local governments, or money for rental and mortgage assistance and food aid, all priorities of Democrats. Democratic leaders felt this proposal was beyond insufficient. Senate Minority Leader Chuck Schumer of New York called it completely inadequate. Senate Majority Leader Mitch McConnell of Kentucky brought the measure to the Senate floor this week as efforts by the Trump administration and Democratic leaders to strike a bipartisan relief agreement stalled. He aimed not only to show Republicans and particularly vulnerable GOP senators running for re-election this year were taking actions to fight the pandemic, but also to put pressure on Democrats ahead of Election Day. The bill that passed through the Democratic-led House was more thorough. The Senate bill would have cost probably about a tenth of what the House proposal would cost. And the House proposal offered the direct stimulus payment of $1,200 and an additional $600 a week unemployment benefits through December 27th. Unlike the House bill, the Senate legislation would have allowed some small businesses to apply for a second loan under the Paycheck Protection Program, or as it's better known, the PPP, and create liability protections to limit lawsuits against businesses, universities, hospitals, and healthcare workers. And this has been a particularly strong point of contention between the two parties, as the Democrats don't want to give these protections to businesses. The Senate bill also provided $105 billion in education funds, about 2/3 of which would be reserved for schools that reopened for in-person instruction, and would have forgiven a $10 billion loan to the U.S. Postal Service, which has been crippled by the pandemic. Congress also failed to pass a fifth coronavirus package, even as the outbreak infects tens of thousands of Americans per day, and the economic pain felt by millions of jobless people sharpens. Lifelines, including the jobless benefits, a federal moratorium on evictions, and the window to apply for the PPP small loans have already lapsed. While President Trump has taken unilateral steps to extend temporary unemployment and limit the evictions like we talked about last time, only Congress can pass the comprehensive relief package because it holds the purse. Doubts have grown about lawmakers' ability to approve any more stimulus during the heated final weeks before the 2020 election. Even so, House Speaker Nancy Pelosi told reporters Thursday that she's hopeful Congress can pass another bill before Election Day. Asked Wednesday about whether another relief bill would come together, Treasury Secretary Steven Mnuchin responded, "I don't know. We'll see. I hope there is. It's important to a lot of people out there." Vaccine news. This is probably the best thing that could happen. We need a useful, effective vaccine at this point because it doesn't look like we're going to get any significant relief from lawmakers. So the only thing that we can do is arm ourselves and try to make something of this economy that's in a shambles. In a previous episode, we explored the role of the U.S. Food and Drug Administration, also known as the FDA, in regulating the new vaccine. A couple of weeks ago, the FDA gave, actually I think it was last week, the FDA gave emergency use authorization to the drug remdesivir, which is a convalescent plasma therapy for all patients that are currently hospitalized with COVID. But earlier this month, in September, the Journal of American Medical Association published a study of less severely ill hospitalized adults showing that 5 days of treatment with remdesivir was better than standard care, but the difference was what they called an uncertain clinical importance. So that's to say that no other studies have been published supporting more widespread use of remdesivir. Yet the FDA said the data was compelling enough to expand its use to all hospitalized patients, including children. Basically, at the same time, there was no indication that the drug would be better than a placebo. Eventually, this authorization was removed. Also, back in May, the FDA issued an emergency use authorization for the anti-malaria drug hydroxychloroquine, which was strongly promoted by President Trump. There was little data supporting the approval, and the agency reversed its decision in June after mounting evidence suggested the drug actually did more harm than good. So all that to say that confidence in the FDA is really at an all-time low. But we need a safe vaccine as soon as possible. And I really want to get back to life as normal. And I'm sure you do too. So what protections do we have? Some members of the U.S. Food and Drug Administration have joined a growing list of government officials, drug makers, and public health experts who pledge they won't compromise safety in the race for the coronavirus vaccine. In a letter published Thursday in USA Today, 8 top FDA officials and doctors affirmed the agency's commitment that all decisions will continue to be guided by best science and maintain independence from political forces. While other scientists are worried the FDA would be pressured to approve the vaccine before it's fully tested, maybe even before November 3rd, the heads of 9 biopharmaceutical companies issued a letter Tuesday pledging to fully vet their COVID-19 candidate vaccines before asking for federal approval to market them. We, the undersized biopharmaceutical companies, want to make clear our outgoing commitment to developing and testing potential vaccines for COVID-19 in accordance with high ethical standards and sound scientific principles, the statement said. Companies in the letter were Astrazeneca, Johnson & Johnson, Moderna, Inc., Novavax, Inc., Merck, Sanofi, and GlaxoSmithKline, and Pfizer, Inc., which is developing a vaccine with BioNTech, another signatory. The head of the FDA on Thursday said he has, quote, no intention of overruling career scientists at the agency on an approval of a coronavirus vaccine, even though he does have the authority. FDA Commissioner Stephen Hahn said any vaccine data released will be discussed publicly at an advisory committee of outside experts, and Peter Marks, who runs the FDA division that oversees vaccine approvals, will ultimately make a recommendation. We all feel the urgency. We all want a vaccine as soon as possible, but we want a vaccine that's safe. Stephen Hahn said that's his promise as FDA commissioner, that he will call the balls and strike, so to say, with our high, rigorous standards on safety and efficacy. He went on to say that the FDA would like a vaccine that's safe and at least 50% effective. The flu vaccine, by comparison, generally reduces the risk of getting influenza by 40 to 60% compared with people who are not inoculated, according to the CDC. Hahn has previously said the agency wouldn't authorize a vaccine that's not safe, even if it is fairly effective. But the CDC normal guidelines on that are at least 60% effective rates. I think the flu vaccine kind of falls into a different category. So I don't know. I think there is a little bit of urgency and maybe a little hazed, according to the FDA chairman. In recent weeks, U.S. health officials have attempted to alleviate concerns about the regulatory process. At a Senate hearing on Wednesday, U.S. Surgeon General Dr. Jerome Adams said there's been no politicalization of the vaccine process whatsoever. There'll be no shortcuts. This vaccine will be safe, it will be effective, or it won't get moved along. Dr. Adams told the Senate Committee on Health, Education, Labor, and Pensions. And when a vaccine is either approved or authorized by the FDA, I and my family will be in line to get it. At the same hearing, National Institutes of Health Director Dr. Francis Collins said studying the safe and efficacy of potential vaccine is the agency and the FDA's top priority. Well, fortunately, though, some of the companies are actually self-regulating. AstraZeneca announced on Tuesday that it was placing a hold on stage 3 human trials for its potential vaccine, which it's developing alongside the University of Oxford, after one of the participants showed signs of a potential serious adverse reaction, which was first reported to Stat News. Further reporting indicates that one participant developed severe neurological symptoms. WHO scientist Dr. Sumaya Swaminathan, I'm sorry if I messed up that name, said Thursday that there's no need to be overly discouraged by the news, adding that these things happen. While the WHO hopes the vaccine trials will resume soon, it must wait for more information provided by Data and Safety Monitoring Board, which will determine how to proceed with the trials. I think this is a good wake-up call or a lesson for everyone to recognize the fact that there are ups and downs in research. There are ups and downs in clinical research or clinical development, and we have to be prepared for those. We hope that things will be able to move on, but again, it depends. It depends on a lot, and we have to wait to see the details of what actually happened. AstraZeneca's vaccine candidate is one of 3 in late-stage human clinical trials, joining Pfizer and Moderna, which both began their trials in late July. The company's chief executive officer, Pascal Soriot, maintained on Thursday, however, that the company should still know whether its vaccine is effective against the coronavirus by the end of the year as long as trials resume soon, according to Reuters. The WHO has identified more than 160 vaccine candidates under development, with nearly 30 in more advanced human trial phases. But as drug makers race towards a vaccine at a historic speed, questions surrounding their safety have surfaced. On Thursday, the Kaiser Family Foundation released findings from their latest health tracking poll that found that 62% of Americans worried that political pressure from the Trump administration will lead the Food and Drug Administration to approve a COVID-19 vaccine before they have enough data to determine whether it's safe and effective. AstraZeneca's Soriot was one of 9 of the executives that signed the pledge that I talked about earlier. When asked about the timing of the vaccine, the WHO Swaminathan said that it typically takes 6 months at a minimum before researchers begin to see results from late-stage human trials. So since some of those trials began in July, it's possible that interim results could appear by the end of the year, but it will take longer for regulatory agencies to examine the results and license the vaccine, she said. In pre-market trading on September 9th in the U.S., AstraZeneca stock was down 2.1%. Upcoming trading will tell how seriously the market views this. It's too early to see what impact this will have. Any investor who thinks that this means the AstraZeneca/Oxford vaccine is out of the game and therefore others are better positioned, like Moderna, is not understanding what's going on. Moderna, Novavax, and BioNTech were up 4.6%, 5.9%, and 4.9% respectively pre-market on Thursday. So a lot of people are getting a little concerned about AstraZeneca's availability. So I'm going to keep an eye on this and continue to provide updates for you. So I'm going to take a quick break, and when I come back, we're going to talk a little bit about the return of the NFL. So stick around, and I'll see you on the...
Tired of searching the vast jungle of podcasts? Now listen close and hear this out. There's a podcast network that covers just about everything that you've been searching. Hey! The Golden State Media Concepts Podcast Network is here. Nothing less than a podcast bliss with endless hours of podcast coverage. From news, sports, music, fashion, cooking, entertainment, fantasy, football, and so much more. So stop lurking around and go straight out to the Golden State Media Concepts Podcast Network. Guaranteed to fill that podcast itch. whatever it may be. Visit us at www.gsmcpodcast.com. Follow us on Facebook and Twitter, and download us on iTunes, SoundCloud, and Google Play.
Welcome back. Thanks for sticking with me. In our last segment, we talked about the coronavirus relief efforts and the coronavirus vaccine efforts. In this segment, we are going to talk a little bit about more typical fall fare, the start of the NFL season. So as of Thursday, the NFL is back, and I'm, for one, very excited. Like other major sports, fans will not be part of the equation, which is bad news for teams that rely on fan noise to distract their opponents. I'm looking at you, Seattle Seahawks. While some baseball teams are putting cardboard cutouts in lower deck stands, this really can't translate to the NFL. So here come the virtual fans. Thursday night, Microsoft will launch a new version of its fan cheering sections through its team video chat app. Microsoft describes the NFL version of the cheering section as virtual mirrors, or LED screens that will appear in each end zone during NFL games, allowing players to celebrate with fans who are not in attendance. After a team scores, players can gather around the screen to view themselves celebrating with fans in teams. The broader collaboration shows how a top sport league is tapping technology to hold compelling live events for large audiences when many people can't attend in person because of the virus. It's also an extension of Microsoft's technological partnership with the NFL that began in 2013, when the league's coaches and staff started using the Microsoft Surface tablets on the sidelines. I don't know if anybody else recognized that besides me. I mean, it looked like a Microsoft Surface ad every single time I looked at the sideline. But I digress. Neither the NFL nor Microsoft have commented on how much these deals are worth, but I'm assuming they're worth a lot. The virtual fan cams used during this season's games will also be big exposure for Microsoft Teams product, which had been growing rapidly before the pandemic spurred a work-from-home tech boom. Part of watching a game on TV is seeing fan reaction. Jeff Tepper, the Microsoft corporate vice president in charge of Teams, told CNBC in an interview on Wednesday. This is a chance to make the games more engaging for that TV audience. The video feeds will also come to TV broadcast, with fans appearing in windows around the player who scored. Think of it as a digital version of the Lambeau Leap. Tepper said the NFL wanted to create energy for the players in a big stadium, so the players know that they're still playing for real people who care passionately about them. In a blog post published Thursday, Tepper wrote that the cheering screens, called fan mosaics, will appear on big screens throughout the stadiums for key games, likely those without spectators and probably those that are nationally televised. Microsoft will provide audio from feeds to the NFL, so the league will create augmented crowd noise custom for each stadium. Microsoft has a similar partnership with the NBA and controls its virtual sharing section for the Disney bubble. Anheuser-Busch occupies the NBA's cheering section sponsorship and will also take the NFL's version, dubbing it the Bud Light Showtime Cam. With COVID-19 restricting larger gatherings in some states, Microsoft leveraged its partnerships with both leagues to sustain fan engagement and assist the NBA and NFL broadcasters with game presentations. Leagues study metrics from virtual fan engagement opportunities and monitor changing consumption habits as sports gambling continues to gain traction in the USA. Also, franchises might need to create new revenue streams if games continue with no fans allowed. as demographics and viewing habits change and society becomes more digital in the way they consume information, the venues also have to change. According to Bennett Indart, a vice president at NTT World Smart World Solution, an information technology firm. And the leagues have to change in terms of how they are serving up that experience. I think you've got to find a lot more different ways to view sporting events rather than just going to the venue. As of the recording of this podcast before the first game, Microsoft's shares were down 2.67% for the day. But I'm going to attribute that trouble as a result of the Microsoft 2-screen phone, because it looks gorgeous, but it's just not performing well. So fans are going to be piped into stadiums virtually. Another part of sports, good or bad, is betting. Growing up on Long Island, there were no shortages of OTBs in the area. And for those not in New York, an OTB is an off-track betting. There were always these dirty, smoke-filled places where you didn't want to see or be seen. And you can make a little bet on some horses or something like that. If you really wanted to bet on a game, you'd go to a Vegas or Atlantic City casino, make your bet, and come home. These days, you can bet online with fantasy sports commonplace. I'm terrible at it, but it's fun. Online betting has reached an all-time high. Draftkings is hired just ahead of the kickoff of the highly anticipated NFL season opener tonight on Thursday. Last Wednesday morning, the company added NBA legend Michael Jordan as special advisor of their board in exchange for an equity stake in the company. Jordan currently is the chairman and majority owner of the Charlotte Hornets and is known to be a big gambler and looks like a really great fit for this company. And has rapidly launched sports betting operations in states that have passed new legislation since 2018, when the U.S. Supreme Court struck down a federal ban on sports betting. Jordan will provide strategic and creative input to the board of directors on company strategy, product development, inclusion, equity, and belonging, market activities, and other key initiatives, DraftKings said in a statement. Note the mention of inclusion on the list. As the NBA and WNBA continue to lead other pro sports leagues in encouraging its athletes to speak out on social issues, DraftKings wants to take the right steps in that arena as well. DraftKings CEO Jason Robbins, in a statement, said, "Jordan is among the most important figures in sports and culture who forever redefined the modern athlete and entrepreneur. The strategic counsel and business acumen Michael brings to our board is invaluable, and I'm excited to have him join our team." Investors may wonder whether Jordan's advisory role is just the first step toward him eventually joining the company's board. DraftKings co-founder and president Matt Kalish, in an interview with Yahoo Finance, threw cold water on that possibility. For the time being, at least. I think we're all reticent that, as a team owner, there are some guidelines that have to be adhered to there. We're going to start with the deal, and then we're going to get as much out of that as possible. And that's because NBA team owners are not expressly prohibited from serving on the board of a gaming company, but any more involvement than that is not welcome by the NBA. And for those of us who watched a ton of basketball in the 1990s or who watched the epic 30 for 30 documentary, The Last Dance, know that MJ has always been a fan of betting. So I think this is going to be a pretty good partnership, and it may actually bring online sports betting to even more of the mainstream culture. DraftKings was taken public on April 24th by merging with an already public SPAC, Special Purpose Acquisition Company, and the stock quickly surged, even amid the global pandemic with live sports shut down. Shares are up more than 100% since then. And, I've been craving sports. I've said this on earlier podcasts that I watched celebrity cornhole and horse in the early days of the pandemic. So I'm glad that sports are back in whatever limited capacity they are. So with the return of the NBA season, Draftkings and its competitor Fanduel, along with other betting apps like Bet365, have returned to running high volumes of television ads. The start of the NFL season is typically the most crucial time of the year for these companies, when they sign up the most new users. But DraftKings and FanDuel also got some very bad news last month when the IRS issued guidance suggesting it believes DFS contest entry fees count as wagers and thus fall under the existing excise tax on sports betting. The tax would be 0.25% of the amount of every contest fee. So the companies are expected to challenge that, but that tax can really cut into their bottom line. Penn National Gaming provides a more traditional means of sports betting. Shares of the casino owner Penn National Gaming rose roughly 12.5% in the first half hour of trading on Thursday. They then promptly gave back almost all of that gain before heading higher again. About noon Eastern on Thursday, the stock was holding up to a gain of around 10%. This type of volatility isn't really shocking, but given that Penn National is up 150% so far in 2020, easily outdistancing most of its peers. During the early part of the 2020 recession, Penn National fell sharply among its peers. The big concern was that the shutdown of non-essential businesses in order to slow the spread of the virus would be bad for casino companies, with Penn National being a traditional casino company. And it really was. Penn National reported a per-share loss of $1.69 in the second quarter. But when its shares started to recover, along with many of its peers, the focus shifted from the in-person physical casino to digital plans. And I'm not a big casino person, but it's going to be a while before I go into a casino because people are touching things and it's not where I want to be. So Penn National has partnered with Barstool Sports to expand into online sports betting. The relationship has resulted in a number of positive reviews for the stock on Wall Street. Another upbeat analyst call, this time from Rosenblatt Securities, came out today, Thursday. That company's coverage of the stock was initiated by a buy rating and an $80 per share price target. So now what? Penn National's online strategy is exciting, but at this point, the stock has moved dramatically higher in a short period. Moreover, it has vastly outdistanced both the broader market and its peers. Long-term investors should tread cautiously, since it looks like a lot of good news is baked in here. Indeed, it wouldn't be surprising to see investors take some profits, something that the volatility in early trading today perhaps hints at. So, I think I would rather be sitting at home making a bet than going into a casino. Plain and simple. So I think this future of sports betting is going to be pretty big. So that's why in our next segment, I'm going to give you 10 of what are considered the best sports betting apps for your entertainment and for your information. So I'm going to take a quick break now, and I will...
Do you work in the world of marketing and advertising? Are you a media buyer or the owner of an agency? Have you been looking for a podcast to help stay on top of all the goings-on of those worlds? The GSMC Marketing News Podcast is dedicated to keeping you up to date on all things concerning marketing and advertising. Get the latest marketing news from what major businesses have planned for the coming year to the newest trends in advertising, from podcasts, digital and streaming, to the old standbys of radio, television, and billboards. The GSMC Marketing News Podcast has you covered, whether you're a marketing agent or a business trying to expand your brand.
Welcome back to the show. In our last segment, we talked about the new frontier with sports, and that's going to be online betting and online spectatorship. So I wanted to take the opportunity to give you some guidance on which apps to use for your sports betting. Sports betting industry in the USA continues to grow following the Supreme Court's decision to repeal PASPA in 2018. Sports betting is now legal in more than 20 states, and the industry is worth about $150 billion, making unbiased sportsbooks reviews that much more important. The key is selecting a U.S. betting site that offers excellent security, easy banking options, and a highly enjoyable sportsbook experience with a wide variety of betting options. And as always, like I said at the top of the show, please observe your state's laws when it comes to online betting. I don't want to be responsible for somebody doing something wrong and coming at me for it. So just follow your state's laws and make your bets legally. So at number 10, we've got Draftkings that we've already talked about. The Draftkings online sportsbook and betting app combo is actually one of the best-known legal sportsbooks for American bettors. Along with their primary rival, Fanduel, Draftkings was one of the first sports operators to provide legal online betting in the U.S. Both brands made the jump into online sports betting from the world of daily fantasy sports. Today, Draftkings is one of the most recognizable brand names in the sport thanks to several well-funded ad campaigns. So does the platform live up to the hype? Sport Betting Dime seems to think so. Overall, DraftKings provides an incredibly approachable sports betting experience. It's easy to navigate through the site, and it caters to new bettors by walking through the basics. Seasoned bettors have plenty to be happy about as well, with boosted odds offered on an incredible selection of different sports and betting markets, with a bonus of up to $1,000 credit. Their website is www.draftkings.com. At number 9, we have Fanduel. Fanduel online sportsbooks and betting app represents the evolution of daily fantasy sports sites into full-on sports wagering. As one of the world's best DFS sites, Fanduel has taken the sports betting by storm. Along with their closest competitor, DraftKings, Fanduel plans to aggressively expand their product offering. As more states across America legalize online and mobile sports betting, you can expect to see more of Fanduel. The brand is already extremely well known with sports fans everywhere. Fanduel has done an excellent job of meeting and exceeding bettors' high expectations with their sports betting menu. They were acquired by online gaming powerhouse Paddy Power in 2018, bringing years of sports betting industry expertise to the table. The Fanduel Sportsbook review covers everything you need to know when you're deciding which betting site is best for you. Fanduel offers several straightforward promotions for both new and existing customers. Though the range of bonus offers available is not as extensive as some competitors, the $500 sign-up offer is a great way to get started on the right foot. Ongoing promotions reward you for recruiting your friends. You can either get friends to join you on the platform or simply take advantage of boosted odds on local teams or major events. Those who enjoy a bit of competition like the Keep the Cash promotion, an ongoing trivia-style game with cash prizes. Unfortunately, Fanduel does not yet offer a sportsbook rewards or loyalty program similar to the one offered on the daily fantasy side of this site. You can find them at www.fanduel.com. At number 8, I've got BetMGM. The BetMGM online sportsbook and betting app are taking over the ever-expanding legal U.S. sports betting market by storm. Perhaps more than any other online operation, BetMGM has aggressively expanded into new online markets at a much faster rate than their competition. If your state offers legal sports betting online, you can expect to see BetMGM available soon, already up and running. The online sportsbook and BetMGM app are the results of a partnership between gambling powerhouses MGM Resorts International, and Roar Digital. MGM has a name that speaks for itself, and experienced online bettors are likely familiar with Roar's other product offerings, like Ladbrokes and Party Poker. It has impressive online offerings available, and it displays the expertise of two brands with a huge number of betting options. They have a bonus $500 risk-free bet. You can find them at betmgm.com. At number 7, I've got Caesars Sportsbook. Caesars is obviously a big name in gambling. With casinos opening at virtually every legal market, the brand is a powerhouse player with an established reputation among many American sports bettors who've visited the Las Vegas Sportsbook over the years. Today, Caesars is moving aggressively into new markets as legal online and retail sports betting expand across the United States. With retail locations in many states and a Caesars sports betting app available in 3 states and counting, we took a hard look at everything Caesars has to offer. Integration with the rest of the Caesars gambling world is an obvious advantage of wagering with the Caesars online sportsbook, and we're pleased with their initial offerings in the regulated online market. The Caesar app and sportsbook has everything you need to know about banking, bonuses, and the sportsbook experience when betting with Caesars online. They have a bonus of 100% up to $300. Visit them at www.caesarscasino.com. At number 6, we've got PointsBet. PointsBet is an Australian brand that is shaking things up in the U.S. online betting markets with their unique form of wagering, points betting. In addition to the fixed odds wagering most bettors are accustomed to, the platform offers a new take on spread and totals betting. They follow a philosophy of the more you're right, the more you win, to offer dynamic payouts based on margins of victory. Even without this interesting innovation, PointsBet delivers an easy-to-use, engaging platform for traditional sports betting through its betting app and online sportsbook. The brand is committed to offering fixed odds at good value, and their ongoing promo and bonus offers are extensive. Their best bonus is a $200 risk-free bet. Find them at www.pointsbet.com. That's POINTSBET. At number 5, I've got Foxbet. Foxbet is one of the most exciting online sports books and betting app offered on the market today. In the world of legal sports betting, Foxbet represents the future in terms of both the creativeness of the platform and the media partnership that backs it. As a partnership between Fox Sports and Stars Group, creators of PokerStars and BetStars, Foxbet.com and the associated app merges a powerhouse sports media brand with an established gambling behemoth. With heaps of expertise, they've effectively developed one of the world's most popular online betting platforms. The Stars Group agreed to be acquired by Flutter Entertainment, another major online gambling player that runs Paddy Power. Clearly, there's a whole lot of corporate confidence in the Foxbet platform. The result is a unique sportsbook experience that fits into Fox's larger sports entertainment landscape. It has ties to the network's biggest TV personalities throughout the sportsbook and sports betting coverage increasingly prevalent in the network broadcasts. They have a bonus of up to $1,000 credit. Find them at www.foxbet.com. At number 4, I've got 888 Sports. 888 Sport is a subset of the gambling giant 888 with a specific focus on online sports betting. After its launch in 2008, 888 Sports quickly gained notoriety for being an entertaining and well-managed sportsbook that keeps bettors engaged with its assortment of betting lines and bonuses. Today, 888 Sport is focused on expansion into the ever-growing market of legal online sportsbooks regulated in the United States. It's exciting to see what the brand does as they bring a global presence to more players via their desktop platform and the 888 Sports app. It shines when it comes to flexibility and versatility. Their brand is all about catering to every bettor, and they certainly delivered a well-rounded product. That said, the sheer amount of information and options available can be overwhelming for new bettors. They have a bonus of a $500 risk-free bet. Find them at www.888sports.com. Sport, S-P-O-R-T.com. Number 3 is the Golden Nugget. The Golden Nugget has operated a sportsbook at their Las Vegas and Atlantic City casinos for years, but they moved operations online with the legalization of sports betting in states across the country. The Golden Nugget online sportsbook offers a wide range of leagues and sports to bet on, with several ongoing promotional offers and comprehensive reward programs for return customers. I wonder if this is where I can find professional cornhole. The online sportsbook and the Golden Nugget sports betting app are both integrated with the Golden Nugget online casino, allowing bettors who want to play casino games the opportunity to use a single account and bankroll. Their bonus is a $100 risk-free bet. Their website is www.goldennuggetcasino.com. Number 2 is one I've not heard of, and that's William Hill. William Hill has been in the business of sports betting for over 80 years. In many parts of the world, the name is nearly synonymous with wagering itself. I don't know what it is. Today, William Hill continues to grow as it improves its digital offerings and expands to new legal markets, particularly in the United States. This global sportsbook caters to the needs and preferences of players from around the world in terms of banking options and sports you can bet on. And the formula is working. William Hill Online has over 2 million users, as well as hundreds of thousands of bettors visiting the brand's retail location each year. They have a bonus of 100% up to $150. Find them at www.williamhill.com. At number 1, I've got Bet Rivers. Bet Rivers has quickly become one of the biggest and best options for legal U.S. sports betting. The online sportsbook and betting app have expanded to many states with regulated sports betting, delivering a homegrown, U.S.-only platform backed by Chicago's Rush Street Gaming. The Rivers brand is well known in the world of casino gaming, with 4 locations in New York, Iowa, and Illinois. The brand's online sports betting platform, Bet Rivers, is available in each of those states and others. Our experienced reviewers have bet their own money with Bet Rivers betting app and online sportsbook. Overall, Bet Rivers provides an easy-to-use online betting platform with a huge menu of betting options backed by valuable bonuses and promotion. While it's not the flashiest option, it's one of the most well-rounded. So if you are so inclined, check it out. They have a bonus of up to $250. Find them at www.betrivers.com. So, sports betting is evolving rapidly in the United States. We are in the middle of the expansion of the legal market, and people don't want to leave home. So, using a regulated online sportsbook or betting app is probably the most convenient and enjoyable way for American bettors to legally get into action. But honestly, this is all for fun. Sports betting can be an addictive behavior. There are a lot of different treatment options dealing with sports betting addiction. Medication, some patients who have serious compulsive behavior may benefit from medication. Therapy is probably your best option. You can really change your way of thinking, but there are a lot of support groups out there for you. There are 12-step programs like Gamblers Anonymous. Friends and families that may need help to help a loved one fight back against the disorder can call Gam Anon. So don't let this behavior get out of hand. And if you find that you are spending more than you can afford on your sport betting, please take my advice and check out a Gamblers Anonymous group to your local community. And with that, I am going to sign off. Hopefully you will have some fun making some sports bets and enjoy the NFL season. Hopefully by the next time I make another podcast, we'll have some more information on the stimulus packages and the vaccines. So I will be back next time. In the meantime, if you are so inclined.
You've been listening to the GSMC Financial News Podcast, part of the GSMC Podcast Network. You can find this show and others like it at www.gsmcpodcast.com. Download our podcasts on Apple Podcasts, Stitcher, SoundCloud, and Google Play. Just type GSMC into your favorite podcast app to find all of the shows from the GSMC Podcast Network. From movies to music, from sports to entertainment, from business news to weird news. Please subscribe to the podcast and follow us on Twitter and Facebook. Thank you, and we hope you've enjoyed today's podcast.